Good evening, traders. It is Wednesday, December 16th, and it's time for the weekly swing trading video. We've had a market that's gradually floating higher. Looks like politicians are going to take out the sticky components of a stimulus deal, $730 billion. Sounds like a small package when you compare it to the $6 trillion that we had earlier in the year, or the $2.5 trillion that they were talking about before the election. But $730 billion. That's almost the size of the stimulus bill that we had back during the financial crisis of 2009. This is a lot of money. The market is starting to float higher. I think that deal might actually be priced into the market. Fed was very dovish today. We had the FOMC statement, so that's good. We've got the Senate runoff in January. That could be a little bit of a speed bump for us, but we're going to be selling options that expire way before that. Brexit, I don't know. That could be a little bit disruptive to currency markets, certainly to commerce in Europe and England. They don't seem to be able to come to terms as of yet, but we'll see. Right now, the market is floating higher. It's really hard for me to find excellent bullish put spreads because option implied volatilities have declined. Let's take a look at the market first. We have this nice upward sloping trend line. You can see how we pulled back. I'd mentioned to you that we are going to see a little bit of weakness last week, and we have seen it this week. 1, 2 red candles, pull back. Now we're pushing back up to that high on that stimulus bill. And I believe that there could be another little pullback. Usually these dips go something along the line of this: drop, retest, then higher. Even on a bigger basis, drop, retest, go higher. Drop, retest, go higher. So I think we could see a little bit of a mini dip over the course of the next couple days. I sure hope so, because that's going to give us an opportunity to get some spreads done. I still want to stay within that 3-week window. I want to take advantage of accelerated time decay. The other problem that I'm having right now is stocks have run up so dang far. I'm having a really hard time finding anything that doesn't pose a lot of risk, because these stocks that have run so high, they could easily pull back 10, 15%, no problem. So this week, I'm really looking for stocks that haven't quite gotten out of the gate yet, that present a better opportunity for us because they don't have the same downside risk as some of the runners that we've been in. If I take a look at the VXX, that measures option implied volatility. It's also known as a fear index. You can see how low fear is right now. Everything's coming up roses. Asset managers believe that the vaccinations that are going to be happening in Q1 is going to reignite economic growth, so they don't care that the S&P 500 is currently trading at a PE of 40. It's going to take a long time for stocks to grow into their current valuations. That can happen in two different ways. The market can float right now, right where it is, while profits catch up, or somewhere along the line, you hit a snag. The market pulls back, then it runs up, pulls back, then it runs up, and you look back and you go, wow, 3 months have just elapsed. That's how profits can catch up to current valuations, is through a pullback like that. Or we can just head sideways in a very tight trading range. I think we need to be a little bit careful with our bullish put spreads right now. So we're going to err on the side of caution. I've got some great trades lined up for you today. I had to look really hard to find anything that I like. And when that's the case, it usually makes me pretty cautious. But let's go through our current positions. Let's take a look at what we've got on. And in green, I've highlighted all the spreads or the naked put rights that are going to be expiring Friday. So let's cover the spreads first. We've got HLT way out of the money, very nice spread. We've got Cisco way out of the money. That's going to be a good one for us. Etsy, really nice spread. Nvidia, really nice spread. So we've got 1, 2, 3, 4 spreads expiring. Unfortunately, you see this red one right in here. That was Alibaba. We struggled with that one. Let me put that up, and we'll take a look at that chart and what happened this week. So we got news back in here that the Justice Department was going to be reviewing Chinese companies, and they were going to force them to adhere to GAAP rule and regulation, accounting principles, or they could possibly be delisted from the US exchanges. That's been talked about for 6 months. Well, they finally decided that yes, these companies need to adhere to our accounting standards. So Alibaba dropped on the news. Not a big deal. Alibaba has already said, we don't think we're going to have a problem adhering to your accounting principles. So the stock starts to base in here. Looks good, hovering right at our strike price of $265. No problem. All we have to do is get through another week. Tick, tick, tick. Time premium decay. We had a bid out there to try and buy that spread back for a 50-cent debit. That would have been a break even to us. And then along comes Monday morning. And we learn over the weekend that Alibaba was fined by the Chinese government a whopping $76,000. Big deal. That stock lost about $20 billion worth of market cap on that news. And the stock opened $8 lower on Monday. Uh-oh, now we're all the way in the money. Yesterday, it sold off even harder. So we had a $2 bid out there for our spread. And today we got filled on the spread, and you can see that this move right here was nothing but a head fake. It tested that horizontal support. You've got a nice actual candle here. This would be a morning star formation, a doji, and we actually closed above that. That's a bullish candlestick pattern. We're out of the trade. We took a loss on the trade. We put the spread on for 50 cents. We bought it back for $2. That's $1.50 loss on it. I look at that as 3 bullish put spreads that we've had on. That's what this cost us. So to put this back on screen, we had 4 bullish put spreads that expired worthless, and we had one that really dinged us pretty hard. So we're really only up by one of these bullish put spreads. And we made a 25% return on it, which is nice, but it's just very frustrating to have news like that impact us. And I personally feel that we'll probably see Alibaba finish above $265 on expiration this Friday. But I couldn't in good conscience hold that position. And I'm also not practicing good risk management by just leaving the spread on. So we had to have a bid out there. There is nothing that I would have done differently on this trade. I've got to tell you, I looked at it, I've dissected it. I did exactly what I thought I needed to do on it. And we didn't leg out of that spread because Alibaba trades in a very weird kind of fashion. Intraday, you could have been able to leg out of it, but to try and do so overnight, let's say that we bought our short put back in yesterday, and then this morning the stock went up $7. Oh my gosh, we would have had a ton of risk on that position. We're not going to do that. We're all swing traders as far as the Wednesday night videos are concerned, so we're not going to do a lot of legging out of positions unless we have a strong market tailwind in our direction and time till expiration. We didn't have either one of those. The market had been floating higher, so the last thing I want to do is to have a net bearish position on. So we do still have 2 other positions to address. One of them is KNDI, and there we're short the December 18th, $8 puts. We are not buying the puts back. If they are in the money at the close on Friday, we are taking assignment. And the same holds true for TME. TME pulled back a bit today. Again, another Chinese stock. So these stocks are volatile. It's okay. I will take assignment on these. You can see how Candy has been hugging that 100-day moving average. If this option expires worthless, you can see the stock closed at 803 out of the money. If this option expires worthless, I believe that's going to be a 35% return for us. Really nice winner. And we sold those puts way up here. That's how much implied volatility there was in those options. And I felt that I would be a willing buyer down here on that 100-day moving average. If we are assigned, I'm going to send you a special bulletin because Monday morning we're going to turn right around and we're going to sell those $8 calls and we're going to bring in some nice premium and we're going to provide ourselves with some downside protection. TME. That's another stock where we sold an out of the money naked put, got a lot of premium for it. We sold the $18 puts and we brought in 35 cents for those. That's also going to represent a nice return for us, somewhere in the neighborhood of 20%. So you can see the stock is at $17.85. If it closes below $18, we're going to take assignment on it. We're going to do the same thing. We're going to sell out of the money calls against it. So those two positions are still pending, and we'll see how they turn out Friday. Now, I do want to have a side note on this. Let's say that Alibaba went way in the money on us, and we didn't have a chance to adjust, and assignment became a threat. You always know if there's the threat of assignment if the options start trading at parity, at intrinsic value, which they didn't. But let's say that you get a call from your broker and he says, hey, you know what? You just bought some Alibaba via assignment at $265. So you no longer have your $265 puts. There are a couple of things that you can do. If the spread is all the way in the money, which in this case the stock was down to $255, so this was all the way in the money as well, this 262.50 put. If that's the case, you just tell your broker, exercise my 262.50 put. So in essence, what happens is you bought stock at 265, you sold it at 262.50, you lost the difference in the strike price. That's $2.50. End of story. It's done. Now let's say that Alibaba were at $263. Well, these puts would not be in the money. In that case, what you would have to do is you've bought the stock at $265, you would tell your broker, I want to sell the stock and I want to sell my puts. And that's how you would handle that transaction. It's unlikely that we're going to have to deal with assignment. If we do, you know I'm on top of these. I'm going to send emails out to you. I'll have plenty of opportunities for you to get the news and to understand what it is that we need to do. Also, I should remind you that yes, the emails are one way to get the information. The other way to get the information is most of you have Option Stalker or Option Stalker Pro. Hey, it's Wednesday night. Where's my video? I never got an email link. Well, then you go into Bulletin in Option Stalker and you take a look for the date and you can see all my market comments here and you click on the appropriate day and then you're going to be able to find the video with the link in it. And there's the video from last week with the video link. Now, if you've just logged into Option Stalker, you're going to see a pop-up right in the middle of your screen. You can't miss it. So that's another way for you to get the information. If you're a subscriber to Research, you can go right into the chat room. I post those videos Wednesday night. So if you're having email issues and you're not getting your emails, there are two other ways for you to get this information. One is right in the platform, and the other one is right in the chat room. So let's get back to business here and let's take a look at the other positions. Last week, we were able to enter two other positions. We were able to sell RKT, the December 24, 1850 put. We did that for a dime credit. That could also be a 25% winner for us. That expires next week. ZS was a really nice fill for us. We sold the 160, 157, 50 bullish put spread. Take a quick look at how those stocks are doing. RKT, first one up. We're all the way down here on that bullish put spread with a week left to go. I like it. You can see how the stock has continued to tick higher. Really good one. I think that one's going to work in our favor. ZS. I told you about this long green candle and trying to sell a bullish put spread if it came down to this halfway point. Boom, that's exactly what happened. We were able to get filled on that. As far as ZS, we're short the 160 puts, which are all the way down here at the open of this long bar. With 1 week left to go, I think we're going to be in really good shape. You can expect that trading volume is going to be very, very light heading into the Christmas holiday. So we're going to see tight intraday ranges. Things are really going to quiet down. That favors premium sellers. Finally, you'll see that I've got 4 new spreads for you right here. And that pretty much covers everything. Look at all the positions that are going to go away. Bob has already gone away. Target we couldn't get into. So all of this goes away. Friday, this goes away. And then we'll be left. Hopefully, these will expire worthless. We may end up owning some stocks and selling calls against them. But if everything expires, we'll have RKT, ZS, and any of the spreads that we put on tonight. These orders are only live through the close Friday. If we are not filled on the new trades by the close Friday, cancel those orders. So I had to use a number of different searches. I'm not going to go through all the searches that I used, but I had to get creative with the custom search engine because I did not want to buy stocks that were breaking out to a new relative high. I wanted to find stocks that actually were kind of at the low end of the range and that were laggards. And there are a few ways that you can do that. Using the major moving averages is one way. I look for stocks that were below the 200-day moving average. I look for stocks that were above the 200-day moving average but below the 100-day moving average. Heavy volume, relative strength are always part of the searches that I do. I went through so many stocks, and I can't tell you how many of them either had super illiquid options. The stock had run so far that I didn't have any kind of support to lean on, so we were having to go way out of the money, and there just wasn't any credit there. Very difficult week to find anything that I really liked. So here are the trades that I do like. And we'll start right from the top. And the first one on the list is CRSR. You're going to notice something right out of the gate about this one. Not a lot of data. You know that I like data. I need at least this much data to do a bullish put spread so that I can identify support levels. Well, right here we've got the 50-day moving average. You can see that this stock is an IPO. You can see the earnings announcement right there with the letter B before the open. Look at that reaction. Really nice. Well, I don't know a whole lot about the company, but what I do know is that if you gave me a chance to buy that stock at $30, pretty much where that really favorable earnings announcement came out, I think that would be a really good do. You can see the stock got ahead of itself and then it retraced. So when I don't have a lot of data, I better know who they are and what they do. So I went in. This is Corsair Gaming. They make a lot of gaming components and peripherals. Well, that kind of plays into the Christmas holiday theme. It also plays into the stay-at-home theme. Their fundamentals are not bad. They actually have earnings. And the PE ratio, given that the S&P 500 is trading at a forward PE of 40, a forward PE of 26.8, not so bad. So they also have cash on hand and cash as a percentage of debt. Not too bad. I'm going to click on this press release right here, and then you can see their last earnings report. It's kind of a nice feature. Their revenues were up 200%. They made 40 cents EPS. You can read through all the information. If you need that warm fuzzy to be able to do this trade, please do. This is where you can find that information. For me personally, I'd mentioned to you why I like doing this trade. I think that technically it's sound and I've got a decent feel for who the company is on a fundamental basis also. And that also works for me. So I'm going to go in. While I'm bringing this up, I also want to mention to you that the BABA spread, it was offered at $1.94, so I know we were able to buy it back for $2 or better. Hopefully, some of you saw the stock starting to rally and you held off on that order. Now on CRSR, you can see we've got December's, which expire in 2 days, and then we've got to go out to Jan's. Well, if I go out to Jan, you know I want to sell that 130 put and I want to buy the 125. I want to go all the way down here. So this is going to be a longer term trade. This is going to be a 1 month long trade that expires January 15th. And we're going to be selling the $30 put, and we're going to be buying the $25 put, and we're going to be doing this for a $1 credit. I think that's doable. The spread is currently 92 cents bid, offered at $1.04. I think we can get filled on this. And yes, I would like to own that all the way down here at $30. Look at this stock. You can tell this is a runner. It's had lots of upward momentum. So I like it here. It's formed a nice support level. This is our first line of support. That's our second line of support. And we're all the way down in here. I like this trade. I think this is a really good one. So that's the first trade that we're going to be doing is CRSR. We're going to be selling the January $30 puts, buying the $25 puts for a $1 credit. I'll move this back into view so that you can see that trade right here in the staged order entry screen. And by the way, there's the Alibaba. You can see 142 bid offered at 194. So all day you could buy that for less than $2. So let's go into the next one. Intel I've been watching. I kind of like it. I know they've had a little bit of a rough ride. And we're going to take a look at those options and the chart. Here you can see Intel really sold off hard after the news. 1, 2, double bottom, higher low, upward sloping trend line. There you've got your gap that's been filling. Stock above the 50-day moving average, stock above the 100-day moving average. There's your pole, and there's your flag. You can see you draw that downward sloping trend line visually. This is a bullish flag formation off of a deep low. I believe that Intel is going to be able to hold this support level. So we're going to go below the 100-day moving average and the 50-day moving average, and we're going to be looking to sell an out of the money bullish put spread. So on Intel, we're going to go to the December 31st expiration date. And we're going to scroll down to the $49 strike price. And we're click on the $49 put. And we're going to click on the $48.50 put. And you can see that that spread is 4 cents bid, offered at 15 cents. You know that I like to get a dime on these. If I've got 50 cents between the strike prices, I want to get a dime. If it expires worthless, I'm going to make a 25% return on that trade. So to recap, Intel, we're going to be selling the December 31st 49 put. We're going to be buying the 48.50 put, doing that for a dime credit. I like this trade. You can also see that we're below one standard deviation, which also increases our odds of success. And the black line there is the 100-day moving average, which coincides with the chart right there. So that's trade number 2. 2 down, 2 to go. Amazon. Let's take a look at Amazon and see what it's doing. Amazon should do very, very well into the holiday season, especially with COVID. A lot of people are ordering online. So how do we set this trade up? Well, let's take a look at the stock and see what makes sense to us. And you can see that the stock has multiple support right here. 1, 2, 3, 4. Visually, this is a nice horizontal support level. You can also see that the stock today popped above the 100-day moving average. That's also good. If I draw a support line right here, that level, that price level comes in right around 3060, $3,060. Actually, it's a little bit lower than that, but I like that support. I like the fact that it's above the 50-day moving average today. I love the fact that it's above the 100-day moving average. I believe going into the holiday season, Amazon is going to continue to push higher. I'm not looking for it to just sit here. It's okay if it does. I think we're going to see a little bit of a rally. You can also see visually a downward sloping trend line like this right there that's been broken to the upside. Let me draw that with the trend line tool, and we'll click here, we'll click there, we'll drop that. You can see we've got a number of points along the way, and it happens to coincide right with that 100-day moving average and the 50-day moving average, both of which were cleared today by the stock. You can also see we've got an upward sloping trend line right in here, a little bit of a wedge formation. I like this. I think Amazon is going to do well into the holiday season. So we're going to go down to the 3060 strike price. And there you can see it right there. And we're going to click on that. And then we're going to click on the 3050 strike price. Now, Amazon's got a super wide bid-ask spread. So we can't do strike prices that are closer. We could actually go with the 3065, 3060 and go a little bit closer on this. And maybe I will change that because I think that spread's going to be a little bit easier for us to do, and we won't have as wide a bid-ask spread on the options either. So here you can see that this spread is 5 cents bid, offered at $2.10. We are going to try and get $1 for this spread. And we've got $5 between the strike prices, so that would be a 25% return. We've got to put up $4, the difference in the strike price, but we get to apply the dollar credit that we receive. So we've got to put up $4. We receive $1. If it expires worthless, we are going to make a 25% return on it. And if I hover over the low of these candles right here, you can see that that low is 30.72. So we're still below this low here, which is fine. So I'm going to need to change this in the staged order entry screen to the 3065, 3060, and I will do that before you can even see it. So to recap, we're going to be selling the Amazon December 31st, 3065 put. We're going to be buying the 3060, and we're going to be doing that for a $1 credit. That is spread number 3. So we've only got one more spread to go. And we'll take a look at that one right now. And it is on Adobe. Adobe just posted earnings a few days ago. So let's bring up that chart. Let's bring up that option chain and see what we've got. We're going to be going to the December 31st expiration. You can see I'm wanting to keep these inside of a 2-week window. So Adobe recently announced earnings. Reaction was somewhat muted. Didn't really do a whole lot after that earnings announcement. It just kind of sat here. You can see here that we've got a nice upward sloping trend line. Comes into play right here at the 100-day moving average. Got the 50-day moving average right here as well. And we have the stock inching higher. So we need to be able to go below that 100-day moving average. We're going to go down to the 467.50 put on this one, which is right below these two tails right here. So those should also lend some support. Notice how close we're having to go to the money on these. That's because option implied volatilities are starting to really come in. And so we're going to go to Adobe on the December 31st expiration. And we're going to the 467.50s. We're going to click on that bid. And we're going to click on the ask of the 465s. That is our spread. You can see that spread is 15 cents bid, offered at 70 cents. We have $2.50 between the strike prices, so I want to get 50 cents for these. Now this is going to take a little bit of help from the stock, a little bit of help from the market, not a lot. I'm expecting to get filled on 2 of these spreads tomorrow, which is fine. The market should be able to tread water. I think the stimulus bill is going to help. All of those things should get us through year end. All we want is tick, 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 time decay while we're in a holiday mode. So you can see we're below the 100-day moving average. You can also see that we're below the blue line here. That's one standard deviation. We are 2 standard deviations out of the money. Let's recap that trade. Adobe, we're going to sell the December 31st 467.50 put. Buy the 465 put. We're going to do that spread for a 50 cent credit. So let's see how all of our trades play out tomorrow. I'll be monitoring them in the chat room. I want to also mention that next year I've set up an account with $10,000. I'm going to be doing each one of these trades myself. I'm going to be allocating 10% per spread to the trades, and then I will be able to post a real brokerage account, and then we'll actually be able to track how we're doing through the course of the year. This has been an unbelievable year. I wish I had done that at the start of the year, because in 2019, from September on, we were selling bullish put spread after bullish put spread after bullish put spread right into year end, right into February. I could see the danger signs. We were in cash when the coronavirus pandemic hit. The bottom fell out of the market, and starting in March, we started aggressively selling put premium, and we didn't stop until probably July of this year. We paused. That was a really good time for us to pause because the market came in, and then we've just started getting back on track in the last 2 months or so. And it's been a good finish to the year, an unbelievable year overall. So I wish I had had that brokerage account already up and running, because I'd be able to tout that a bit. But no matter. We're going to have a good year in 2021. I'm really looking forward to it. And that brokerage statement will help some of you who are needing to see a P&L. That's all I've got for you. We've got 4 decent trades that we're looking to put on this week. Let's see if we can get filled on them. Thanks so much, everyone. If you're watching this on YouTube, there's a lot of educational content in here. You might be able to get into some of these spreads. I'm going to be posting a video Friday if we can get in on these. That'll give you a few hours to try and get the trades off. But if not, please look at each one of the spreads that I've suggested doing in the video. Take a look at them Friday and see how the stocks are doing. If we can't get into these spreads, a lot of these trades are going to be excellent day trades as well. So for those of you who are an option stalker pro, I may see some of these stocks traded tomorrow in the chat room. Thanks again. We'll see you tomorrow.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.